Stellar XLM, is it a good time to buy right now? Because potentially trillions could flow in to the Stellar ecosystem for a number of avenues. But really, what we need to do is have a look at the charts. We haven't done that for a while, so it's about high time now that we look at the charts and see if we can see any patterns, any confluence, any indication to tell us where we're going in this market. Nathan, over to you.
Okay, thanks Nathan. So, Stellar XLM Technical Analysis. I just want to draw your attention, you guys out there, to what's going on or what went on in the price action market back in 2017 through to 2018. And as you can see, like when we look at this and this pattern, it was really quite flat before we had this spike up in May of 2017, and then it sort of crashed quite a bit. Let's just measure the crash, the depth of the crash. So it crashed down to around 88%, right? So we know that we had that big old 88% crash, and then we had this move up. We had this move up from its bottom, which was here. It moved up around 572, let's on the wick, 554% from its bottom after its 80% crash. Now look at this pattern. Look at this pattern and see if you can see any similarities of what I'm about to show you. Do you get my point? Now, it's not to say that that is exactly what's going to happen. We're going to get this massive rise, but perhaps we can look at, what sort of rise we did have, and then really just take it from there. So, from this point here, from its high, 2018, down to around its low, it's about there, even deeper at 92%, I would say. Okay, but that's fairly similar, give or take 3 or 4%, right? And then we want to measure its move up, which is here, around 3,320%. So even more volume and percentage increase. That is the percentage that you would have made if you was in the market. You was buying in the market between 2019 and 2020, which is phenomenal. But obviously we've had this crash back down. So let's measure that crash back down from that high of 2021 down to its current low, 91%, guys. You notice a similarity there? These 90, 88, 91, 90% drops and the patterns. Now, technically, on the weekly price chart, which is what we're on, we're still below the 200-day moving average, which is this yellow line that you see moving through the candlesticks, and the blue one above that, the 50-day moving average. But what are we seeing here? What is this? What is this looking like? It looks like there's some sort of divergence going on there. It looks like they're about to cross. And when they crossed last time, boom, the markets flew up. and that's what we call a golden cross. Doesn't always work out. I would probably say about 70% of the time it works out, and it really does depend on where we are fundamentally in the market on the macro cycle. This could take some time to play out. We could be looking at this happening in and around the end of the year, which is perfect timing for the president's crypto bill and ISO 200/2022 coming into effect, because in the year of 2023 we should have a strong precedence set for that standard, along with a strong precedent set for the standard of central bank digital currencies, as set out by the ECB. So really, we're looking pretty bullish for 2023 fundamentally. Technically, this is looking good because we're holding in this range. You see this range that I've drawn out, this rectangle bar right there? We're holding in there. And when you look at the volume down here, this volume here, okay, VOL for volume down there, it's really low. Low volume indicates good time to buy. Yeah. High volume prices are going to be higher, obviously. You can see that confluence there, right? High volume, higher prices, low volume, lower prices. So that's an indicator that's going to tell us that, yes, we've got low volume. Nothing untoward's going on there. We're in a range, a low range. We've got a fractal that's extremely similar back down here to the current fractal that we're in, and the increases in percentage rises and drops are similar with our two peaks here. So when we're talking about percentage drops before we get any turnaround in the market, so any trend changeover, which is possibly what we're looking like here. So we've got that as an indicator. We've already dropped 91%. We could drop lower. Is it likely? By the looks of this structures, not. We've also got the 50-day and the 200-day moving averages looking like they're about to cross, like their diversion is set in there. So we've got that. We've got three indicators there that are telling us that we are potentially about to have a trend reversal. Now, hear what I'm saying. Okay, fundamentally, we're looking more towards the end of the year for anything positive in the market to be happening, something concrete, set in stone, like getting actual real regulations from the USA is solid. But technically, this is what I would call blood on the streets. We're very low in volume. We're not high. You can accumulate quite a lot of XLM at these nice prices. Personally, oh man, I would love to accumulate Stellar at 3 cents again. That was some brilliant times. But I'm going to be realistic and say that that's not likely to happen. As much as I would like it to happen, it's not likely to happen. So if we move on to another time frame, and that be the daily, and we want to look for confluence there in terms of our moving averages, and you could see actually the moving average on the daily, we're just below the 50-day moving average, but we broke above it a couple of days ago. And we're trading in this range, again, low volume. We're below the 200-day moving average, so there is confluence there. However, we're actually closer to the 50-day moving average, and closer to 200-day moving average on this time frame. So similar, but we are actually closer to that. What I would want to see for any decent entry from a technical standpoint would be a move higher. I'd want to see 3 green candles to indicate to me that we're going to get out of this range, and then I would want to see a range from here. I would want to see us break this range here. Okay, now that should take us above the 50-day moving average, and we should be testing the 200-day moving average. That's going to tell me that actually we may have an entry there. And to begin with, we're getting, look, on the daily we've got 2 low volume green candles, which is a brilliant indicator. So we could be marching off. We've had some sell pressure, but we've got 2. We need another one. That tells me that we've got our 3 white knights, and there is definitely sight of a trend reversal. So from the downside, from the very, very bearish trend that we've been in for months, several months, starting to turn around and move to the upside is what we're looking for here. And before technically speaking, I'd want to make any entry, another entry, I'd want to see it get above there. But bear this in mind, if we already have all of these indicators that I discussed earlier, telling us that what's likely to happen, it's given us a picture of what's happened before and what could be happening in the future, with the low volume, the fractal we saw back before the 2017 boom, you know, with that in sight, and you know, the 200-day and the 50-day about to cross, or at least looking like they're about to cross on the higher time frame on the weekly, that for me is enough indication for me to enter the market down here. I mean, for me, where my entries are at the bottoms, and I'm clearly 90% plus lower than its previous swing high, which was back up here at around 81 cents, right? So I'm really low, you know, 90% lower than its previous high, right? So for me, that's a good entry. But if you want to be sure about having an entry and about where the trend is going, well, I would certainly say that even though we get up above that range, or even if we get up and into that range that I've just drawn out there, we could still consolidate. And that just means moving sideways for months. We could move sideways for several months easily. And look, when I say that, you could see that here. Okay, you can see that right here. Look how many months, almost over a year of consolidation, 2 years of consolidation from 2019 to 2022. Yeah, so that's 2 years pretty much, and that could happen here. So we could see 24, so we could see around here October 2023 that we're actually we actually start making a move to the upside before. So we could be going through years of ranging, because time is relevant. But as I said, time is relevant to things that are fundamental, and fundamentally speaking, we're at a new industrial revolution, and we're at this new digital age, and governments have done enough research, are just sort of dotting the I's and crossing the T's now to actually be thinking about, beyond thinking about, actually start initiating digital currencies into our system. And that's where we're going. And if you've watched my previous videos, check out my my playlist, Zioncoins Fundamental Analysis. You can see fundamentally we're in a really good place, and all things are sort of coming together sort of by the end of the year. So there you go, guys. Stellar XLM TA for today. I'm Nathan of Zion.
Smash the Zion coin up there, like and subscribe, because remember, sharing is caring. So why don't you share too? Have a great day.